All right. Hey guys, welcome back to Industrial Live, where it's our job to teach you about the market and how to make great real estate decisions. My name is Jeff Hine, and today we're talking about the Denver industrial market. What are some key performance indicators? Where are rental rates at? What's happening with vacancy? Construction, new construction, how much are we building, and how much of that is actually getting absorbed by tenants? And then finally, we're going to talk some sales numbers. Who's buying what? Where's the average price per square foot going? Is it keeping up with the cost of construction? As well as at the end, we're going to jump into a brief overview of one of my favorite sub product types. You could call it yard properties. And why do I like those so much? We're going to take a look at excuse me, and some of the numbers there. So let's go ahead and get started. All right, so bear with me here. I know you're right here. My screen's up here. That's what I'm looking at. But we're going to start off with under construction square feet. This number is just jumping off the board at 10.6 million square feet of industrial product under construction, a 56% increase. And if we look at that quarterly distribution of construction starts, this screen here, you'll see that we had a banger 2021. If we can smooth this out into annualized numbers, you'll see that our previous record was 5 or 6 million of square feet under construction, and now we're at over 10. So that might cause some concern if you are building, or even if you're just a property owner. What is going to be the impact of all this new construction entering the market? Are vacancy numbers going to go way up? However, the picture is not so dim, because when you look at the absorption numbers, how much product are tenants absorbing, we actually outpaced deliveries last year in 2021. We delivered about 6 million square feet, and we absorbed 6.2 million square feet. So that's great news. So we just saw that we have a record number of square feet of industrial product under construction right now. However, when we look at what happened last year, we actually outpaced the square foot of product delivered in absorption. We delivered almost 6 million square feet of product. We absorbed 6.2 million square feet of product, and that is what is driving the vacancy rate down. Now, 2022 is a projection at this point. We're expected to deliver about 10 million square feet of product, but we're expected to absorb a record 8 million square feet of product. Now, that would, if it occurs just like that, that would result in the vacancy rate going up, of course. However, I seem to remember that previously they were expecting that deliveries were going to outpace absorption for 2021 as well, but we beat that projection. So will that be the case for 2022 as well? We will see. Okay, so let's talk some rental rate numbers now, and we're going to start off on the left-hand side here. Market rent per square foot has been steadily upticking for as long as anyone can remember here. We're now over $10 per square foot, triple net for your average industrial market lease rate. Okay, so now let's take a look at market rent growth. These are the year-over-year numbers. Well, rental rate growth had been slowing down since about 2015, when we hit a high of 10% growth per year. It had been steadily ticking down until we hit a low in late 2020 of about 3%. But now it's been on the rise again. The estimate for right now is actually 6.4% growth, which is about keeping up with inflation. That's one of the few things in this world right now that is keeping up with inflation. It's expected to hit a high of 8.5% towards the end of this year before slowly ticking back down into the 4.32 range. However, this is 4 years into the future, so who knows what's going to happen. but we are seeing solid market rental rate growth right now. Okay, now let's talk some sales numbers. And on the topic of inflation, let's look at this market sale price per square foot. We're now at $163 per square foot for your average industrial property in the Denver metro. This is up 13% year over year. So, talking about something keeping up with inflation, this is basically doubling the 7% inflation that we're at right now. However, when you look at market cap rates, really since 2020, just hovering a little bit above a six cap for your average property. And this is surprising to me because even in 2020, we did see interest rates go down. So money gets more affordable with interest rates going down, but cap rates remaining the same. You get a better spread on your money. So it makes an industrial investment opportunity actually more appealing, which seems counterintuitive based on today's market because we have so many buyers entering the market and competing for properties nationwide, really. You would expect those cap rates to go down. People can still get positive leverage on their debt. However, we're seeing cap rates unchanged. So I think as long as interest rates are staying on the lower side, which of course they're expected to start going up next month in March when the Fed increases interest rates, they're talking about increasing interest rates 25 to 50 basis points, probably three times this year. It's the question is it going to affect cap rates? Traditionally, you would think so because money becomes more expensive. People can't pay as much for those properties. However, we saw the dip in cap rates, which had, we had the dip in interest rates, which had no effect on cap rates. So maybe it won't have that effect on pricing. CoStar is predicting that cap rates are going to stay almost exactly the same, maybe tick up to 6.25%. Okay, so on the topic of sales, one last thing that I want to talk about here before moving on to yard properties is who is selling and who's buying. If we look at this chart here, sales volume by seller origin, you'll see that 45% of sellers are national companies, 3% are foreign companies, 52% are local here to Colorado. So this is split almost exactly 50-50. Sellers are 50-50 local, in-state, 50% out of state. Now, that begs the question, okay, who is buying and what makes up that composition? Well, looking at this chart on the right here, sales volume by buyer origin, you'll see that only 32% of buyers are local here to Colorado, 62% national, 6% foreign. So that's essentially, we had 50-50 sellers are from Colorado, but only 1/3 of buyers are from Colorado, 2/3 from out of the state. Okay, and finally for today, I want to take a quick look at industrial yard properties. Now, these are sites with good coverage ratios generally. So for purpose of the statistics today, we're looking at properties that the building only makes up 1/5 of the total lot size, or it could be a smaller building than that. So think, for example, a 20,000 square foot building on 2 or 2.5 acres a yard. Or it could be double the size of that, right? 40,000 square foot building on 5 acres, for example, or something with a smaller building, but still the same proportion of yard. And for the purposes of this, we're looking at building sizes up to 50,000 square feet. So there's small buildings up to a smaller mid-sized building, but still with a good sized yard. And I'll tell you why I love yard properties. One, nobody's building it. Under construction square feet, there's only 33,000 square foot of industrial buildings going up. This is like one or two buildings going up right now. Now, if you recall, there's over 10 million square feet of industrial product going up across Denver Metro. So only a tiny, tiny fraction of new construction meets this sub-product type, this niche. Nobody's building it. Vacancy rate, super tight. This is about half the Denver Metro average. Anybody who's been looking to buy a yard property or even to lease a yard property knows that they're extremely hard to come by. Anything half decent that comes on the market gets snapped up really quickly, and people do want high prices for them. The average rental rate for a property like this is about 30% higher than the Denver Metro average, actually about 35%. Obviously, this varies a tremendous amount based on the actual property and how much yard they have. Now, talking about rental rates a little bit more, we are seeing in many cases that premium yards, especially those close to Denver, especially if it's fenced, even if it's paved, it doesn't need to be paved though. We're seeing rental rates go above 4,000 per acre per month, plus taxes on top of that. Market sales price per square foot, we're well above $200 per square foot. This is a 10% year over year increase. Interestingly, not meeting that 13% market sales price increase as we're seeing Denver Metro wide. And market cap rate, 6.3. To me, this is still an attractive cap rate. These type properties aren't your typical Class A brand new properties that are commanding four caps, right? They're mostly older buildings, think Class C type buildings, but with a good sized yard. However, for that reason, a lot of these properties are covered land plays. Maybe in 5, 10, 20 years, it'll be a development site. So that's all I got for you guys today. I hope you found this informative and useful. If you do have any questions, let me know. Happy to help. And thanks for tuning in. See you next time.